Ben Bernanke's tenure at the chairman of the U.S. Federal Reserve is winding down. He presided over the 2008 financial crisis and all of its aftermath. Bernanke is expected to hold his final official press conference later this week. CCTV's Daniel Rytnjes joins us now for a look at a modest man and the challenges he faced over the past 8 years. Daniel?
On November the 21st, 2002, a certain member of the Board of Governors of the Federal Reserve, Philip, said this: "A central bank whose accustomed policy rate has been forced down to zero has most definitely not run out of ammunition." This is the central question of Ben Bernanke's legacy as the Fed chairman rests on whether that ammunition he ended up deploying was wisely done.
That said, the risks remain that tight federal fiscal policy will restrain.
Ben Bernanke will be remembered as the man who steered the U.S. economy out of the worst crisis since the Great Depression, a crisis he studied carefully as a professor of economic history. But like most economic luminaries of his generation, Bernanke stands accused of missing the warning signs.
They should have acted more quickly, in retrospect, to head off this buildup of this bubble economy that became so evident, particularly in the housing market in 2007. So they were slow. But once the crisis hit, I think he will get very good grades for moving aggressively and quickly and with the maximum tools available to him.
When the crisis hit, Bernanke was one of the key architects of the bailouts of failing financial institutions. Earlier this week, he joined his predecessors to mark the 100th anniversary of the Federal Reserve, looking back at his crisis.
The Federal Reserve's extraordinary response to the financial crisis and the Great Recession was, in some ways, nothing new. We did what central banks have done for many years and what they were created to do. We served as a source of liquidity and stability in the financial markets and in the broader economy, and we worked to foster economic recovery and price stability.
Under Ben Bernanke, the Federal Open Market Committee slashed the U.S. benchmark interest rate to almost zero, and then adopted an economic stimulus strategy previously rejected by the Japanese as ineffective: the purchase of trillions of dollars of government bonds and mortgage-backed securities in an effort to further pull down the cost of borrowing and boost employment. The final verdicts on that experiment haven't yet been handed down, and may not for years to come, because critics say there will be long-term unintended consequences for the world's over-reliance on cheap dollars. As the Fed begins the process of unwinding its almost $4 trillion balance sheet under his anticipated successor, Janet Yellen, in the coming months, those verdicts are going to start to trickle in. Phil?
Daniel, one of Ben Bernanke's biggest accomplishments, as some people think, is the transparency that he's instilled at the Federal Reserve. Do you think he was successful in that?
I think to an extent both in style and in substance, because he opened up this notion of having regular press conferences. That enabled many of the financial journalists to have a real opportunity to examine and scrutinize what he was saying and what he was doing. On top of that, they issued this thing called forward guidance on what sort of decisions they would be prepared to make if economic conditions met it. Now, the markets are still struggling with this. They're still coming to terms with this. But fundamentally, I do believe that Ben Bernanke was trying to communicate that in the absence of inflation, jobs, 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 and the kick-starting of the economy was what he was all about. One of the ironies, of course, is that in some ways critics are right in saying that in doing so, he actually benefited the Wall Street elite because they have the best access to all of the markets, all of the money that's been cheap. They've been able to put it into interesting opportunities around the world, which has given them even more money. So yes, I think Ben Bernanke has communicated well, but he's also had to deal with some unintended consequences as well.
Very good. Daniel Rytnjes, thank you very much. Live for us in the newsroom.